Hello guys, my name is Welt. Welcome to my YouTube channel, and in today's video I'm going to be talking about the SMC concept, which is called a liquidity grab concept. Right, so this video is going to be self-comprehensive and explanatory, but it will be in a short form. So now let's get straight to it. Alright, so talking about a liquidity concept, or simply liquidity grabs, what can we say about it? We can identify them in different terms, right? It can be identified in different terms. So it just depends on what you want and how you can perceive the definition. All right. So now talking about liquidity grabs or liquidity sweep, as it might be. So a liquidity sweep is when price temporarily breaks a swing low or high to trigger stop loss or entice breakout traders, then sharply reverses, revealing this intention of smart money. You get the point? So it's just like a temporary break of a swing high or a swing low in this sense. Now we have a structure, a bullish structure per se. This is a bullish structure, right? This is a bullish structure, right? Now there was a temporary break in the swing low, meaning this break of structure, this high that was supposed to be cleared with a full body candle was not really cleared. Instead, price stopped here and left a wick, right? Price stopped here and left a wick instead of a full body candle close, right? So in this sense, after price decided to close with a wick at around this swing high, that is in the case called what? A liquidity grab. Because if price should close with a wick breaking a swing high or low, then and price is ending it with a wick, then you can see price reacting or reversing sharply into the back into the external low, or the internal low rather, into the internal low or external low. You get? So that is how the concept of liquidity grab works. You get? So you can actually simply use liquidity grabs to take reversal trades. That is the logic behind liquidity grabs. Yeah. So you can use it to take reversal trades. And in this sense, it might happen like this, where we have structure moving like this. We have series of breaks like this, like this. Then when price break got here, price decided to stop like this. So as price decided to stop like this, price is going to do something like this, right? Price is going to do something like this. So in this sense, we can actually say that there was a what? Full body break around this area. You can see the full body breaks that were happening there. You can see the full body breaks. So the full body breaks were happening there. So there was series of full body breaks. Then until it gets to this zone, then price decided to end with a wick. Price decided to end with a wick, not a full body candle. Then after ending with a wick, price decided to react and reverse. After reverse, it broke this low. Then price decided to come back around this zone and do what? Sell to the downside or change its trend. You get the point? Decided to change its trend in that sense. So now that is the case of what? Liquidity grab concept. That's the case of liquidity grab concept. It is used in terms of what? Reversals. It's used in terms of reversals, nothing more. And it can also be used in terms of continuations, but in most cases it happens only in reversals. So I'll show you an example briefly on where you can be able to see these liquidity grabs or sweeps. Now, okay. So prior to this, all right. Um, okay, so now prior to this, there is actually a trade that happened on the 4 hours time frame on GJ that talks about the liquidity graph concept that I explained earlier. Alright, now this is it. Now you can see in this type of structure, or in this trade here, you can see there was a bullish structure. We have this high, we have low. You can actually say this is a high because this is the main low, this is a low, right? This was the next high and this was the next low. Now this high was supposed to break with a full body candle just like the others, but what happened here? You can see the high closed with a wick and the body stopped, like the body closed below the candlestick, like below this swing high. You get, so it's closed with a wick and price decided to react by rejecting and creating another form of what, rejection, for price to do what, sell to the downside. So can you see now? So after that sense, you can see there was a liquidity grab here, or a sweep, whichever way you want to call it. There was a liquidity sweep here. Then after that, you can see price decided to do what, reverse back, because the liquidity sweep, this candle or this price did not break this high, this swing high on the 4 hours time frame, right? So this low here got broken, giving it a what, a shift in price or a change of character, like we do know it. And now this other block, a POI was mitigated in this zone, telling you that what, this price can actually sell because of that liquidity grab that happened. So there was a what, a sell reaction around the price targeting this low. This is the swing low or the internal low, whichever you want to call it, or the external low, whichever way you want to call it. So but it is actually a swing low, right? A swing low. So now you can see price got there and reacted back and continued the bullish movement. So the essence of trading using liquidity sweep or liquidity grab, mostly on the higher time frame, is if you have a failed momentum of price, because if price fails to break a swing high and close with a wick, that's a liquidity grab, and you can actually spot an opportunity for trading the reversal on the higher time frame, in most cases like the 4 hour time frame. You get, so, and most cases, notice most cases on the other time frame, like the 4 hour and the daily time frame, or perhaps the weekly time frame, if there is a liquidity grab, something like this happening on those time frames, ensure that you what, you take it and like you observe very well, wait for price to react around that zone, like for it to reverse, and then look for setups in continuation. And by targeting the what, by targeting the internal structure or the internal zone in price, you get, it's just like from external to internal, from internal to external. That is how liquidity sweeps happens. You get the points now. So this is how you can be able to get the liquidity grabs on the chart. If you are seeing these full body candles, this is what, these are breaks of structure that price has completed its movement, or price has completed its movement. So then, but if you are seeing something like this, like price is closing with a wick, not a full body candle, then, and you have to wait at first because this is a liquidity graph. Then if price should clear a low, a previous low of the high, then you can now wait for price to do what, restructure itself, and then look for either sells or buys depending on the bias and what you're actually seeing on the chart during the time. You get it. So with this, I'll come to the end of this video. If you are new to my channel, please kindly like, share and subscribe to my YouTube channel for more content, and I'll be sharing you educational and educative content about how SMC is being traded, or how you can use SMC to catch beautiful trades in the market. Thank you guys. I'll see you in the next fight.